From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
This is Money Talk for Father's Day weekend 2025. Let's see what our Brewers are up to this week. The St. Louis Cardinals are here for the weekend, then the crew hit the road for the whole week. It's a good weekend to fill up your dance card with Polish Fest or the Lakefront Festival of the Arts or Harvest Fest and Heart Fest in Wauwatosa. That's just to name a couple. Okay, let's start with China. They're banning banks from enticing new customers with the popular Labubu dolls. And too bad this isn't a visual medium because the Labubu dolls, if you're not familiar with them, look like teddy bears on crack. It's been a good week for news headlines like TSA announces Costco cards are not valid forms of ID at the airport. Really? From Michigan, Bigfoot sightings in Michigan prompts cannabis dispensary to offer discount with photogenic proof. Okay. And finally, we'll leave you with Frankenstein, with the Frankenstein headline. Scientists at Yale have restored a pig brain hours after its death. Porky is back, but he's still a pig. On the podcast today, we have Kendall Bauer, Mike Hoelzl, Joel Dresang, and wrapping up the week, here's Kyle Tetting.
Well, thanks, Max. A bit of a down week this week. NASDAQ down 0.6%. That's 123 points, closing at 19,407. The S&P 500 down 23 points on the week, down 0.4%. And the Dow Jones Industrial Average lost 770 points on Friday to turn negative for the week, down 1.3%. For the year, down 0.3%, including dividends. The S&P up 2%, and the NASDAQ up 0.7%. Mike, probably start this week with just some of the uncertainty that seems to have popped back up. We've now got a war going on between Iran and Israel. It had seemed like things were calming down, and all of a sudden now we've got a lot more to pay attention to. Perhaps another reminder as to why trying to time these markets seems to be a futile effort.
Yeah, just when you think, you're out of the woods, as Kendall said before the podcast, a little bit of calm here, and now all of a sudden we're kind of in the midst of a potential geopolitical firestorm here that who knows, could it end today, could it end in 6 months, who knows, but yeah, the whole point of kind of being in the markets and balancing the portfolios is to weather stuff like this, because we talk about it all the time. I'm sure listeners have heard myself and others say this. The great unknown is right around the corner. You could plan out, hey, things are looking great. Tariffs talk is kind of subsiding. We may be getting some trade deals, we may not, but things seem to be calm going into summer. And then, I was going to say boom, but that's the wrong word to say. My apologies, everyone. But then the next thing happens, and it's this, and now you have to basically shift all of your plans that you were thinking about.
And Kendall, we saw Treasury rates move a little bit lower this week, especially 10-year, 5-year, down around 0.1% each. And yet the shorter-term Treasury bills not really moving at all. The Fed's on tap for a meeting next week. I think we got some better data on inflation this week, which we'll get to in a second, but it seems like perhaps the Fed's in the clear here to continue to push off any kind of rate moves for the foreseeable future.
Yeah, I wouldn't be surprised to see another pause and kind of wait and see comment, press conference from Chairman Powell after the announcement. But to your point, and not to jump too far ahead, but some, CPI numbers, PPI numbers coming out, not showing a giant spike, which I think is great. I think still curious to see some of the impacts from, the existing baseline tariffs that have been in place now for a month or so. You haven't really seen the impact of that yet. I think some of that being, of course, being on a lag. But to Mike's point, I think if we're looking for glass half full takes, more discourse on tariffs, I think, is a positive. Inflation not spiking, a positive, but to your point, you never know what's around the corner, and the events of today and yesterday in the Middle East are a good example of that.
Joel, maybe we dive into consumer price, producer price indexes this week. Again, I think Kendall kind of hit the nail on the head, but what were your takeaways from kind of those two inflation gauges?
Well, yeah, we're repeating ourselves every week. We're saying that the hard news is that we're not really seeing what we were expecting a couple of months ago, and so it's just basically the hard numbers versus the expectations, and we got further evidence of the expectations sort of getting numb from the on again, off again trade war news. We got that from the University of Michigan's consumer sentiment number today. So consumers are feeling a little bit better about how things are going. A couple of months ago, they were expecting much higher inflation. But as you said, the CPI news, the Consumer Price Index, the broadest measure of inflation, was up only 2.6% from a year ago. So that's a lot closer to the 2% long-term target that the Fed has than it was just 3 years ago when it was about 9%.
That consumer sentiment number was an interesting reading. The quote that really jumped out at me from the Wall Street Journal article on it was that consumers are largely feeling a little better because the current policies haven't caused major economic upheaval thus far. And I think an interesting way to phrase that perhaps we should feel a little better because, well, it's not as bad as it could have been.
Right, and that's the whole expectation of upheaval. And then when the upheaval doesn't show, then you feel a little bit better about things.
And then there are two things I saw today that I find very interesting. A poll showing the president's numbers on the economy. He's now minus 16. So, I mean, take that for what's worth compared to the consumer sentiment number. People must not think it's that great. And the other part that I find interesting about the consumer sentiment number is you couple that with the unemployment rate that has ticked up ever so slightly ever since January. So I'm having a hard time reconciling why more people feel good about this, or maybe it's less bad.
Yeah,
I guess
it's they thought it was going to be a lot worse, and they're not seeing that yet, and it's still early. I mean, a lot of the consumer price index and the producer price index, we're seeing only mild inflation there so far, but we've heard from a lot of businesses anecdotally that they're going to be raising prices because of the trade policies that have been in effect so far.
Go ahead, Kendall.
Oh, I was just going to point out, too, I think some of it's interesting to look at the correlation between that sentiment report and the rally in markets over the last month and a half. Not to say that correlation equals causation, but some of it I think is a piece of recency bias or a portion of recency bias. We've seen that when markets nosedive, all of a sudden sentiment typically is heading in that same direction. We get 3-4 weeks of a market rally, and all of a sudden now people are saying, maybe it's not as bad as we thought. And so just an interesting point I thought I'd throw into the mix of that.
We'll get a really important data point next week on retail sales. We've got some front looks at it. Some of the consumer finance credit card companies talking about some softer credit card spending in the last month or so. You've got the Retail Sales Federation that has pointed out that May data actually looks okay, but a lot more signs that spending is starting to shift a little bit. And I think most importantly that, we still haven't seen the bulk of the brunt of any tariff policies as we've continued to delay a lot of those. And so I do think, we've got a lot of data on tap from an economic perspective in the next week that I think will give us a better reading on where is the economy presently. The challenge, of course, is where is it headed?
And one of the things that I took out of the Consumer Price Index was the role that shelter is playing in that measure of inflation. It gives a lot of credit to the cost of shelter in our lives. But if you take out shelter costs, that inflation rate was only 1.5% year over year. So that's below the 2% general inflation rate that the Fed is shooting for. But it's also below where we were with that same index minus shelter going into the pandemic, which I'm kind of using as a baseline more or less on a lot of indicators. And that's the third month in a row that we've been below that measure of inflation, from where we were in February of 2020. The interesting thing about shelter is that that's not a cost that's going to come down anytime soon, and not very easily. It's not something that the Fed can change interest rates and have a really big effect on that shelter cost. That the shelter cost has more to do with supply and demand, and that involves demographics and the number of houses available.
And of course, we all need a place to live. And so that supply is not, that demand is not going to diminish anytime soon. And so the answer then perhaps is, well, how do we continue to support supply? It's always fun in looking at, I use fun, it's always interesting to look at some of these inflation numbers and then strip out certain things like shelter. Shelter is an interesting one to strip out for me, because for many of us, our shelter costs are fixed. If you have a 15-year, 30-year fixed mortgage, you know what it's going to cost for the next 15 or 30 years for you to live in that home. The problem, of course, is that's locked a lot of people into their home. It's made a lot of people really second guess, do I want to move on to something else? Which, of course, then means that there is far less supply, as all of those people now are more entrenched than maybe they have been. I want to pivot today to what has been an incredibly important topic, I think, for us over the last few years. This Sunday, June 15th, will be the National Elder Abuse Awareness Day. And I think especially for what we do, financial crimes, financial abuse of the elderly is such an important part of, I think, what we have to pay attention to, but also a very important part of the conversations we have with clients, Kendall. I think not a day goes by that I'm not having a client in the office or on the phone where I have something I need to pay attention to make sure that they're not being taken advantage of, that they've not fallen victim to any number of countless frauds, schemes, grifts that are out there. Of course, not only are the elderly targeted because at times they can begin to slow a little in their ability to navigate more complex, maybe more technological situations, but also the elderly tend to have some of the largest stores of wealth, strong credit, houses they can tap into, retirement savings. And I think it makes especially our older clients and our older neighbors targets for these kinds of fraud. But I think one of the ways we can combat these types of issues is just to have an open conversation about what kinds of things we're seeing. So maybe go around the table here and just talk about what kinds of things have come up. Kendall, what are you seeing as you talk to clients? What kinds of things have you come across that might raise some red flags for individuals and might be worth sharing with others?
Yeah, there's a few common ones, and it's a sad reality of the world we live in now that these fraudsters are getting more and more technologically savvy with how they try to lure elderly clients and investors and get personal information to defraud them from their accounts. Some of the most common ones that we've personally seen at here, romance scams. So building an online relationship or rapport with a widowed elderly person, and slowly starting to get more and more comfortable with asking for money, and then what we've seen occur after that is those requests get bigger and bigger over time. That's unfortunately a very common scenario. Also, the one that we've seen, I think, more recently, and you might have even had a personal experience with this one, is grandparent scams. So criminals are calling senior citizens posing as their grandchildren, and saying that they're in jail and they need money, oftentimes in a foreign country. They need money wired to post bail and get them out of jail. And maybe you can expand a little bit more on your experience with that.
Yeah, my own grandmother, going back more than 20 years now, so it's not as if this is a new scam, but my own grandmother received a call from someone pretending to be me, indicating that I had been on spring break in Cancun, that I was in trouble. I was in jail, and I needed some money, but be sure not to tell my parents. Well, I very much was not, nor had ever been in Cancun, and was able to connect with Grandma pretty quick. But it was a pretty clear reminder that, well, yeah, you say I'm in jail, I'm in trouble, I might sound a little funny because I was up all night, and nowadays with artificial intelligence, with the ability to create voices that sound similar to maybe somebody you know, somebody you trust, it can be even more convincing. It's why it's so important to have open conversation with family about what you're going through, where you are, what you're doing, and even to the point of adding a code word potentially for the family so that in a situation in which you really do have an emergency, you can communicate that, no, Grandma and Grandpa, this really is me. I really am locked in a jail in Cancun, and I very much need your help getting out. I think those are all kind of ways that we need to pay attention to, but also help prepare for. Mike, a bunch of other stuff out there. What kinds of things have you come across, or what kinds of things are you hearing?
Well, kind of to piggyback on some of the scams, you have your IRS scam that, they say the keyword that freaks everyone out is taxes. You didn't pay your taxes, so now we're going to come seize your house, and you get freaked out there. But actually, one of the more common ones that two of my clients have actually got. Now, fortunately, they were on the ball. They pointed it out to me. And I think probably some of us in this room have gotten it, where you get the buzz on your phone, hey, you have unpaid tolls, or you have unpaid parking tickets. And you're like, oh, my God. And all of a sudden, you just rush to pay it. And all of a sudden, they have all your information. Like, it could be, you have those very complex scams as well. But you have something as simple as someone just has your phone number. They text you, you have unpaid parking tickets, or I drive down to Chicago a lot. You have unpaid tolls, and it can be very easy to be like, oh, just send me $40 and it's done, do-do-do, and all of a sudden your information's gone, and it's the simplest thing, but they're targeting everyone with that, but it's very easy that if you are not paying attention, which again, some of our elderly clients aren't because this is all brand new to them, it's so easy just to fall for that. And so I'm happy my clients knew what was going on. They used some language that I will not use on this podcast to describe what was going on with it. But the biggest thing that I took away from them was they didn't panic. They just stopped and they kind of assessed the whole situation and realized we don't have any parking tickets. So that, with the scams we're talking about, the first thing you have to do is just take a breath and just kind of assess the situation and see where you're at.
Yeah, Mike, they really push a sense of urgency. Don't talk to anybody. Send me the money right away. Send me your driver's license or whatever, right away. Just because they don't want to give you that opportunity to talk to somebody and get a different perspective or take perspective yourself. It's interesting. There was research done led by the University of Wisconsin-Madison looking at how to prevent some of this stuff. And what they found was that the more people knew about scams, the less likely they were to fall for them. And for the last couple of years now, we've, on a regular basis, been putting articles on our website about various scams. And they usually have hints on red flags to watch for and other resources to get more information. And if you go to landis.com, where I think you can just type in, we call them heads up. If you type in heads up Landis, Landaas, you should get a list of all of the articles that we've done. And we're going to keep continuing to do those just because, as you said, the Cancun jail scam is decades old. None of this stuff is new, but as Kendall pointed out, you bring technology into it, and they all look a little different.
I think the critical piece that you hit on, Joel, is that there is this desire as humans to want to resolve things, to help, but to do it quickly. And I think we have now entered an environment in which, especially if there is any doubt in your mind whatsoever, slow down, pick up the phone and call us. Call your financial advisor, call your attorney, call your CPA and go, hey, the IRS sent me a letter, or more importantly, the IRS called me. Yeah, they're not going to do that. They're going to send you a letter telling me that if I don't give them, $1,000 for taxes, that they're going to throw me in jail. What do you think about that? Go online, type in, here's the thing that just happened to me. Is this legitimate? Odds are somebody else out there has typed in the exact same thing. There's probably a message out there somewhere saying this is a scam, don't fall for it. And I think those kinds of tips, coupled with just awareness in general, share this podcast, share those newsletters, share the information that we're putting out, that the FBI is putting out, that UW is putting out. Those are immensely incredible resources that just spread awareness, which I think is so critical to making sure that ourselves, but also the ones we love, don't fall prey to these kinds of scams.
I think, too, the other thing you can do in your meetings with your advisor or call, your advisor to check on this. Number one, checking on estate plans, beneficiaries, always a good thing, good habit to do at least once a year. Part of that process here that's, I think, a few years old and maybe part of the Secure Act or Secure Act 2.0 was a feature called Trusted Contact. So this is something that we talk to clients about regularly at our meetings. We try to make sure we get this updated or check in on it, at least once a year. But having a trusted contact on your account, and sometimes it's a difficult conversation because we all want to pretend like we're going to be, at our full mental capacities forever and ever. But listing that person is someone that we could contact if we felt like we've seen some strange behavior or you were potentially the victim of fraud. And understand that this person they don't have access to your accounts. It's not a financial power of attorney. It's somebody that we could, conduct a financial welfare check, for lack of a better term, on your behalf to check in if we see some of these red flags or start to notice potential fraud on your accounts.
I think many in the industry bemoaned FINRA Rule 4512, which created that trusted contact. The interesting part is that pretty quickly we came around to the idea that this was actually a wonderful tool to make sure that our clients had help when they needed it. We're not going to go out of our way to reach out to those people unless there's already something that we think may require their action. And again, we can't give them direct information. We can't do anything on the trusted contacts word, but it does give us somebody to talk to if there's a concern about something. And I think far too often we have gotten to places in our industry where, well, this particular investor didn't really share the plan, or maybe they didn't even have a plan, and now their kids, their friends, their relatives can't step in to help because they don't know what the plan is. And so I think it speaks to just how important it is to work with a good team, to have a good plan in place, and to share that plan with those in your lives that are a part of it. Because
it's really part of your prevention from these sorts of scams to share the wealth of information you have. And I understand how people, might want not to disclose everything to their loved ones, but it's important to be open with your family so that they can be involved in these sorts of things.
No, I think as we enter a weekend in which we're going to celebrate Fathers, certainly on Sunday, but also a good reminder on that June 15th that there are a lot of people in our lives that we should be paying attention to. There's a lot of things out there that are actively trying to harm them, and that's not I got to pay attention to what's happened with my dad, but it's everybody in my life should be aware of what's out there, should be aware of what steps we can take to help each other. With that, we enjoy doing the program for you. We'll talk to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.